So this is me clocking into Five Guys at 5:30 a.m. trying to figure out a way in order for me to make ends meet. And not only that, right after I clock out of Five Guys, this is me doing Uber Eats and living a life that felt like prison. Now I know a lot of you guys are going through the same thing right now, and having that alarm wake you up, you feeling like you have to go to this job. So that's when I decided to completely quit. But now this is me in New York. This is me in the Grand Turks. This is me buying my dream car. This is me doing everything I knew was possible, living a life of freedom, and it all came through trading. I quit my job in March 2021, and I have not worked a job since. And it's all thanks to trading Forex. Now I know most of you guys aren't living the life that you guys want to live, aren't living this life of freedom. Some people just still don't believe that it's possible to live the life that you want to live. You guys are working with no freedom, working this job that you hate, working for somebody else's freedom. So I decided that I want to help more people find freedom, because the more people that I can help find freedom are the more people that will make this world a better place. So in this video, I'm going to show you guys everything you guys need to know in order for you guys to start finding your freedom using trading. Anybody can do it, and all you need is a phone, and you can do it anywhere in the world as long as you have some Wi-Fi. So the first thing I'm going to explain to you guys is what is Forex, which is the one thing that I'm specialized in and the way I found my freedom. Forex is something that a lot of people do without even knowing that they're doing it. The best way I can put it is, let's say you go on a trip and you go from the United States to Europe. In order to buy something in Europe, you need to exchange your currency that you currently have, which is a United States dollar, and you need to exchange it from that currency to European dollars. And that's what the foreign exchange market is, which is Forex. But how do we make money exchanging currencies? So I'm going to put it in a very simple way. Let's say you have $10,000 in United States dollars and you want to change it to the European dollars. Let's say one United States dollar is 1.45 European dollars. That means that if you exchange 10,000 United States dollars, you're going to get back 14,500 European dollars. And when that happens, there's something called an exchange rate. So that exchange rate that you're looking at is 1.45, but that is constantly changing depending on how the economies are doing on each different currency. So now let's say that you don't spend any money in Europe, so you still have 14,500, and you got that at a 1.45 exchange rate. Let's say you want to exchange it back from European dollars to the United States dollars. Let's say that exchange rate changed in your favor and it turns into 1.00. That means that you are going to get back, instead of getting back your original $10,000, you're going to be getting back $14,500. So in that case, you just made $4,500 by just exchanging currencies. And the greatest thing about that is that now we can just do it at a press of a button. You don't necessarily have to go anywhere. You can just do it here and capitalize off that exchange rate changing. And I'm going to show you guys exactly how you can predict these changes in the market just by using technical analysis and just a little bit of fundamentals. But don't worry, you don't have to be an expert in reading the news. You don't have to be an expert in anything. I truly believe that anybody can make this happen. So to do this, you're going to need two apps. You're going to need MetaTrader 4, which MetaTrader 4 is pretty much the executional platform that you're going to use in order to place your positions and actually risk money. So now TradingView is going to be the thing that gets you out of the dumps. TradingView is going to show you guys exactly how you can quit that job, how you can leave that life of prison. You're going to be able to find the profitability by working and practicing on TradingView. So let's go ahead and show you guys how to find TradingView real quick. So the first thing that you're going to want to do is just go to Google and then put TradingView. So you're just going to want to go ahead and click that right there. So once you click on TradingView, this is what pops up. So what you want to do is click over here and put get started. So right over here, you guys can click right here to sign up. $0 forever, and it's completely free unless you want other features like this, but you won't need these other features until you become a little bit more experienced in the markets. So it's going to ask you for how you want to sign in. I am going to go ahead and sign in using my Gmail here. So once you sign in and you create that password, you're going to want to go to Super Charts, and this is how it's going to look. I know this seems like a lot, but you guys are going to know exactly what everything is once we're done with this video, and then you're going to see like these little icons over here. This is your toolbar. So these are where you're going to go ahead and grab your tools. This is where the date and time is. So this x-axis is where the date and time is, and then this y-axis is where is the currency at right now. So in terms of gold here, you can clearly see that it's at 2,299. So you'll be able to see that to the right. And then on the top here, this is going to be your time frames. This is going to be the currency that you're currently looking at. Here you're going to have indicators, and we're going to be focused on the candles chart over here. So make sure you guys just don't change that. It should be the default version. So once you click here, you're going to be able to pull up all these symbols. So you're going to have stocks, funds, futures, forex, crypto, indices, bonds, economy, options, pretty much everything. So we're going to be focused on this forex section. So in this forex section, you just want to go ahead and grab Euro JPY. So if you can't find it here, all you're going to have to do is just go EUR JPY, and it should be the first one that pops up right here. Try to get the one that says FXCM over here, and then that should pop it up right over here. So for now, I only want you guys to focus on one pair while you're learning. So now you can go ahead and just minimize this. So we'll go ahead and minimize that. So now that you have your trading view pretty much set up here, I kind of want to break down on how to read your forex pairs. That way you guys have an understanding of how they work. So if I go back to right over here, this is pretty much the euro dollar versus the United States dollar. So the primary currency here would be the euro dollar, and then it's going against the US dollar. So if the euro dollar starts to get stronger, the price of this pair would actually go up. And if the USD starts to get stronger, price will actually go down on that specific pair. So the same thing for this pair right over here. British pound is the primary, which if it gets stronger, it'll go up, and if it gets weaker, it'll go down. It's pretty much battling against each other. I mean, as you guys can see, there's a bunch of these. So I mean, you're gonna want to make sure that you're picking the correct one. And I think the best one for beginners is definitely Euro JPY, which is the one that we just added, which is this one right here, which is the euro dollar versus the Japanese yen. Okay, so if the euro dollar gets stronger, price will go up. If the euro dollar gets weaker, price will go down. But this is the primary and this is the secondary. So now you're gonna ask yourself the question, when to trade. Now this is a big problem that I see a lot of traders have, is that they don't understand when to trade what pairs. So this right here is something called sessions. Okay, so this is when the markets are moving. This is the best times to trade because there's actually liquidity in the market, meaning money going in, money coming out, which causes the pair to actually have movement in the market, which is what we're looking for. We don't want to trade a market that's just staying still. In order to catch the best trades, you're going to want to trade in the best sessions. But each session has a certain currency that's going to be moving the most. So for Tokyo session, you're going to see that a lot of Japanese yen pairs are going to be moving during that section because the Tokyo market is currently open. So for the London session, you're going to see pairs like Euro or like the GBP tend to move in those sessions because that's when that economy is open, because that's when the banks in London are currently trading. So for the New York session, you're going to see pairs like the USD tend to move, but most pairs tend to move during this session because the United States dollar runs the world. But the pair that I choose to trade is the Euro and JPY, because you're going to get a little bit of the Tokyo market open, you're going to get a little bit of that London market open, and then you're going to have it move during New York because London and New York has a crossover time where London market's open and that New York market's open. So that's why I choose to trade Euro JPY, is because it's going to give us the most amount of time that that pair is actually looking to move. If you want to find an easier way to find your sessions, all you have to do is go to indicators and put market sessions. Now you're going to be able to find it, which is this one right over here is the one that I use. You go ahead and add that and it's going to pop up on your screen. Once that pops up, you're going to want to double click and be able to change the time zones that you're currently in. New York session opens for me at 8 a.m. and it closes for me at 3 p.m. and London session opens for me at 2 a.m. and closes for me at 8 a.m. So this is all central time. So you change it to the time zones that you're currently in order to find these sessions a little bit easier. So now, like I was saying, on the left side of your screen is going to be your toolbar. The first thing you're going to want to do is click on this little right thing over here, and you're going to want to go ahead and grab that cross, and you're going to want to go ahead and grab this arrow. Now, I'm going to show you guys exactly what that cross is. That cross is just a better way to find price through a linear path rather than trying to, just grab your arrow and trying to see, okay, is this price the same as this? This makes it a lot easier. And this cursor is just a cursor, so it's just the same mouse that you currently have. Then you're going to want to go ahead and grab a trend line over here. This trend line is pretty simple to use. It's pretty much just drawing a line on the chart so you guys can find clues in the market using a trend line. The next thing that you're going to want to get is a horizontal line. A horizontal line is just a horizontal line going through right to left all the way so that you guys can see, okay, price is coming here, price is coming here, price is coming here. That's something that's very, very important when it comes to this. So make sure you guys have that horizontal line as well. And then you're going to want to go ahead and grab your long position and short position. So this is pretty much when you do execute a position, you're going to want to go ahead and put that on your chart. This red section will be your stop loss, meaning if price comes all the way down here, you're looking to get out of your position. And this over here will be your target. So you can set this however big you want it and then see if price comes all the way up here, you'll be able to close that position up here in profit. Also for the short position, it's just the opposite of it. It pretty much has the stop loss on the top and then it has the target at the bottom. You'll look to get out here and you'll look to get out here in profit and here in a loss. So now we're going to go ahead and grab the highlighter tool, which this is something I like to use when I'm looking to highlight something on the chart or just making sure that I'm pointing out something key when it comes to the markets. That way I can actually just have it highlighted and be sure to not forget that that zone is there. Then you're going to want to go ahead and grab your text. Your text is actually very important because your text, if you want to mark down some notes or something like that, you'll be able to go and just write any notes that you guys want. And then the next thing that you're going to want to grab right here, which is in the highlighter section that we got the highlighter from, you're going to want to go ahead and grab that rectangle as well. And that's pretty much all you guys need. So this rectangle is pretty much just showing you either a level of support or a level of resistance or a point of interest, which we will be getting into shortly. But this is just to draw a zone. But other than that, that is pretty much all you guys need in order to mark up your charts correctly. And if you guys notice, as you were adding them, this little toolbar shows up so that you guys can go ahead and either click here. You guys can just have it easy access rather than trying to look for it. So I know what you guys are thinking, looking at these candlesticks, you're like, what the heck is happening over here? So this is where we're going to show you guys exactly what candlesticks are, how to read candlesticks, and how to understand candlesticks. So this is how a candlestick looks. Now I'm going to go ahead and change the colors just so you guys don't get confused. So this will be green, 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 red, red, red. So now this is how candlesticks look. Pretty much you're going to have something called a candle body, which is this whole section of the candle or this whole section of the candle. And then you're going to have something called wicks. So wicks are called these little whiskers over here that you guys see. These are wicks that you guys will need to know in order for you guys to learn how to understand candlesticks. So the first thing that you guys need to know is on a bullish candle, right? So a candle that's moving upwards or a candle that's moving upwards like this, you guys are going to notice that when price starts to move up, it's because so it opened at this price over here and then came up and closed over here. Since it closed above the open price, that means it is a bullish candle. That candle traveled up in price. Same thing for the bearish side or the downside. It's pretty much opening here and then it's closing here, so it moved down in price, so that is a downward candle or a bearish candle. But now there's something called lows and highs. Okay, so pretty much this candle here opened and decided to come all the way down over here, but then eventually come back up and come all the way to this high and then eventually close right here. So this is just showing you how far price has traveled in this specific candle. Same thing over here, price opens here, comes all the way up here, comes all the way down here, then it closes over here, so that means it moved down in price, so it's a bearish candle, but it's showing you where did price travel during this specific candlestick. Every single candlestick is a representation of time, and now I'm going to go ahead and explain to you guys time frames. Right over here, you're going to want to go ahead and grab the 30-minute and just go ahead and add it to your favorites bar. That's going to go ahead and add it up here. You're going to want to also go ahead and grab so your 4-hour one, your daily, your week as well, and then just make sure that you guys have it all favorited. And now I'm going to explain to you guys exactly how to read a candlestick using these time frames. So pretty much this candle over here is the weekly candle, and this chart, each candlestick is 1 week. So this will be 1 week, 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 this will be 1 week. Now pretty much this is saying price came down, came back up to this high, and now it's currently sitting right over here in this 1 week. So now if you go down to the daily time frame, it's the same thing, just each candle is now worth 1 day. So this is 1 day, this is 1 day, this is 1 day, this is 1 day. Okay, so they're all 1 days here that is showing you where price moved and where price went. So Pretty much, let me just explain one of these candles here. So price comes down, price then comes back up, comes to this high, and then closes right there. So that's showing you that price is currently bullish because it opened here, came back up here, and closed above where it opened. So that one day was bullish. So now the same thing for the 4-hour time frame. It's the same chart, just more detail as you go down in time frame. So now each candle here is worth only 4 hours. So 4 hours, 4 hours, 4 hours, 4 hours, 4 hours. And then so you guys understand, price opened here, price then came up to this wick, then came all the way down, then rejected and closed right there. So it moved down in price from the open price. So that means it is a down candle or a bearish candle. A good way to understand bearish and bullish candles is because a bear, when it's attacking something, it's attacking to the downside, and when a bull is attacking something, it's attacking something to the upside. So bullish is going up and bearish is going down. So that's a good way to remember it. So now we're going to go down to the 1-hour time frame. On the 1-hour time frame, it's the same chart as the weekly, the daily, the 4-hour, but we're just getting more detail. But now each candle is only worth 1 hour. So this is 1 hour, this is 1 hour, this is 1 hour, this is 1 hour, and this is 1 hour. So pretty much what happened on this candle right here, price opened right here, price came down, then pushed up all the way to this high, and then closed right here, but it moved up from the open price, so it is a bullish candle. It's going up. So same thing for the 30-minute time frame here. So now every single candlestick here is only worth 30 minutes. So 30 minutes, 30 minutes, 30 minutes, 30 minutes, 30 minutes. But in this specific candle right over here, price opened right here, price came up, price then came down, touched right here, then came back up and closed right at that level right there. But it went down from the open price, so that means it is a bearish candle. So now we have our favorites toolbar, we have our favorites time bar. So now we can easily just start grabbing these time frames and looking at the market. We can also grab our tools very easily that we need in order to analyze the market. So now there's going to be 3 types of market structure. There's going to be a downtrend, pretty much a trend that is coming to the downside. There's going to be something called a consolidating market, which price comes up to 1 point, down to 1 point, back up to the same point, and back down to the same point. So this is something called a consolidating market. Market is kind of just moving in a sideways direction. And then there's something called a uptrend or an up market. Breaking highs, respecting lows, breaking highs, and respecting lows. So this market is clearly going up here. So whenever the market is coming down, there's 2 things that you need to know. There's going to be a lower high and a lower low. Pretty much this lower high is sitting right over here because the market pushed down over here and came over here, but this high is lower than this high, so it's called a lower high. When the market comes down, there's going to be a new low, which that low is lower than the previous low, so this is called a lower low formation. Then price comes back up, this high is lower than the previous high, so that's now called lower high formation. Now price comes down, this low is lower than the previous low, so now this is lower low formation. 2 things that you want to understand in a bearish market is whenever you see price coming down, you want to either sell at resistances, which is over here, sell here, or sell here. Right at these levels, you're going to want to look for sells either here, 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 or sells here underneath the previous low, or sells here underneath that previous low, or sells here underneath that previous low. That's what you guys want to know in order to find a downtrend. Now for a sideways trend, it's pretty much showing you guys equal lows and equal highs. Every single high that comes up here, it is at the same place, and every single low that comes down here, it's at the same place. This is the type of market that you do not want to trade. So this is a no trading market in terms of our strategy. We do not want to look for positions. Okay, so these are the lows of the market and these are the highs, but there's no true direction, either down or up. It's just going sideways. So we want to sit out when the market is creating equal lows and equal highs. So now in an uptrend, there's 2 things that you guys need to know. Whenever you're looking at an uptrend, is because price is creating a higher high and then a higher low, then another higher high. The reason why this is called higher high is because this high is higher than the previous high, making it a higher high. Now this is called a higher low because it's higher than that previous low, making it a higher low. And in this type of market, we could trade it, and you guys are looking to buy at supports and buying above resistances. Buying above here, or buying here, or buying here, and buying here, or buying here and buying here. So these are your points where you're looking to buy from. Okay, so if price comes up and breaks that previous high, you can look for a buy. If price comes down, touching that previous high but never breaking the previous low, you can look for buy positions going to the upside. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So now that you guys understand exactly how to read market structure, we can then move on and show you guys some terms of market structure on the chart here. So in this scenario over here, from that point to this point, what are we doing? We are currently moving in an uptrend. Why? Because we are creating higher lows, higher highs, 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 and higher lows. So we are clearly in an uptrend. So I'm going to show you guys also a downtrend over here. So in this section of the market, there is a bearish trend sitting right over here, or a downtrend, because we are creating lows from this point and lower highs, lower lows, lower highs, lower lows. From here to here, we were in a bearish market, and the market was currently moving to the downside. So now a consolidating market will actually look like this. Price has equal highs sitting up here and then equal lows. Now they're not always going to be perfect, but from this point to this point, we are currently creating equal highs, equal lows, equal highs, equal lows, equal highs, equal lows, and equal highs and equal lows. So in this case, there is a sideways trend, so we are not looking to trade that market. So now that you guys know exactly how to find uptrends and downtrends, now we can go ahead and move on to fundamental analysis. So now when it comes to the market, we understand that there's two different ways to predict the market. There's technical analysis and there's fundamental analysis. Technical analysis pretty much exactly what we just showed you, reading candlesticks, drawing out zones, etc. And then there's fundamental analysis, which is reading up on the news and trying to predict how the economy is doing. So we use a website called Forex Factory. So what you're going to want to do is just search up Forex Factory, and then you're going to get taken to this website here. So what I really want you guys to focus on is just these red folders and these orange folders. All you guys have to do in order to do this, go up to where it says right over here, this little green button over here. You guys can click that and put it to only show your fundamentals, either the red folder and the orange folder. And then of course you want to have your bank holidays to make sure that you're knowing when the markets are going to be slow. So in this case, GBP has red folder news. The reason why I want you guys to be careful with red folder news is that price tends to have a lot of volatility and tends not to respect market structure and tends not to respect technical analysis during high impact news. So this is high impact, that's why it's red, and this is medium impact, which is orange. This one you don't have to be too worried about, but it's always good to know when it's coming out, just so you can be prepared. You know, make sure you have your stop loss set, have your take profit set, that there could be a lot of volatility during that moment on the USD pair. Each currency has their own news. Okay, so this is GBP news, so we have red folder news sitting right there. This is USD news, which we also have red folder news. And then this is USD news, which we also have red folder news. Now the gray folder is pretty much showing you when there's a bank holiday, which that's when you can see a lot less volatility in the specific market that you're looking to trade. If the banks aren't open that day, it's going to be hard to catch a big move on that specific day because there's not a lot of money going in and out of the market. So there's not going to be a lot of volatility. So I definitely recommend to stay away from days that have bank holidays and stay away from days that have high impact news. So in this scenario, I'm going to show you guys how high impact news can affect the market and can affect your trading if you guys do decide to trade it. I definitely recommend to just stay away from it. But if you guys do decide to trade it, be careful with it because things like this tend to happen. So news comes out here at 8:45, which is sitting right over here. And then you're going to notice as soon as 8:45 hits, you're going to get a big drop. And then price decides to just do whatever it wants. And keep in mind, guys, this is on the 3-minute time frame, so this only took 3 minutes here. But I would definitely look to stay away from high impact news because it can definitely affect your trading in a negative way. I tend to stay away from them, so I'm going to recommend to you guys to just stay away from them. So one thing about me, I like to keep my trading as simple as possible. So we're gonna hop into the technical analysis section where I'm gonna show you guys how to draw your resistances, your supports, and everything you guys need to know exactly how to trade them. So the first thing that you're gonna want to do do is when you hop on the charts, you're going to want to go up to the daily time frame. So you're going to want to go ahead and draw out zones, and these zones mean where price has reacted to in the past and can they react to in the future. So in this scenario, we have one zone right here, another zone there, another zone there, another zone there, that price tends to react off of, right? So what you really want to look for is zones with 3 or more touches. So in this case, we have one touch over here, we have another touch right here, and then we have another touch over here. So that's making it a valid zone. Okay, so then we have another zone that's sitting right down over here because we have a touch that happens right here, we have a touch that happens right here, we have a touch that happens there, and we have a touch that happens there. Okay, so I just want you guys to draw 2 zones on the daily time frame so you guys can have a visual representation of where price can go at certain points in the market. Now when you go down to the 4-hour time frame, and then you're going to just want to go ahead and draw out 2 more zones of touches. And if you ever feel doubtful if a zone is valid or not, all you have to do is just stretch that zone to the left and then see if we've tapped into it multiple times, and then this zone is clearly valid. This zone is clearly valid because we have one touch there, one touch here, one touch here, one touch here, and one touch here. So more than 3 zones makes it a valid zone. So now we're gonna go ahead, just draw 1 or 2 on that time frame. I do see another one sitting right over here. So we have one touch here, another touch here, another touch here, another touch here. We want to make sure that we're getting as many reactions as we possibly can and making it as precise as we can in terms of that level. So now we're going to go down to the 1-hour time frame, and if you're noticing on the 1-hour time frame, we have something called a ranging market. Okay, so now there's an overall consolidating market which we don't want to trade, and then there's something called a small ranging market, which is what we're looking for in terms of my strategy. This will be called your no trade range. Okay, so anything within this box here, you don't want to trade it. You want to wait for either a buy above it or a sell below it. How do we mark that up and label it? So anything within this range, we're not looking to buy it or sell it until we're out of the range. So in this scenario, this will be our no trade range. This will be risky sells over here because the overall market is bullish. So if you're noticing on the overall market is bullish. So anything for buys is going to be safer than sells. Okay, and then we have a safe buys above this zone over here that we can currently see that the market tends to want to buy from this level. So how do you find a buy market? Is because once we're above this level, price tends to push up. Once we're above this level, price tends to push up, price tends to push up, price tends to push up. So if we are above this level and we are in a bullish market, we will look to take a buy position at that level, keeping stops right below this low because we want our stop loss to be at a level that if price breaks lows and respects highs, why would we want to be in a buy position? Remember what I told you guys, a bullish market is when price pushes up, comes down and respects those lows and breaks highs, respects those lows and breaks highs, respects those lows and breaks highs. So the same thing is happening in these candlesticks. If price comes up and breaks lows, we don't want to be in a buy position anymore. So in this case, we would have a 15 pip stop loss and a target level over here. So now also remember, this red section is how much we are willing to lose or willing to risk, and this section is how much we are willing to make or how much we are willing to profit. Let's see what happens. Price then just should shoot up here because we are in safe buy zones, and price tends to just push to the upside. So now I want to dive a little bit deeper into pips. So this is how you guys are going to be able to calculate your pips and how to read pips. So if you're noticing over here, we have 6 numbers. Over here we have 6 numbers as well. If this was a 1, it would be 10,000 pips. So for every number here, it's going to go up or down 10,000 pips. For every number here, it's going to go up or down 1,000 pips. For every number here, it's going to go up or down 100 pips. For every number here, it's going to go up 10 pips. For every number here, it's going to go up 1 pips. Every number here, it's going to go either up or down 0.1 pips. Okay, so how do you tell that on the chart? Okay, so let's say we wanted to take this position over here. So if I want to risk 15 pips, right, which I'm looking at this number right over here. So in this case, I'm risking that price is going to not move down 15 pips and it's going to move up 50 pips over here. So in this case, we're risking 15 pips to catch 50 pips. So that's something that you guys want to keep in mind when you are trying to calculate your pips in terms of money. So if you guys do want to calculate pips in terms of money, all you're going to have to do is download a app called Steno. Okay, so here you're going to want to put your account balance sitting right up here. You're going to want to put $1,000 if you're trading a $1,000 account. If you're trading a $10,000 account, put 10,000. If you're trading 100,000, put 100,000. But for example's sake, I'm going to keep it at $1,000. Now for risk, you're going to want to risk either 1 to 2% per position in order to get the most practice out of each account. That way you can build that confidence and take as many trades as you can with that one account. You don't want to risk 50% of an account because you will blow your account. You want to make sure that you are using this as practice, so you only want to risk maximum 2% per trade. So here I'm going to put 2% risk. In this scenario, we have a 15 pip stop loss. So now I'm going to click this little arrow here on the bottom right. So now I'm going to choose the currency pair that I'm trading. I'm trading Euro versus the JPY, and then click calculate. Once I'm here, I'm looking to calculate this position. In terms of this account, which is a $1,000 account, 2% risk would be a $20 risk. So if I want to risk $20 on a 15 pip stop loss, I need to throw a 0.214 lot size. So a lot size is pretty much how much you're willing to risk per position. So now that you guys know exactly how to use your lot sizes, you're going to want to go ahead and go back to your app store and get MetaTrader 4. On MetaTrader 4, we're going to go ahead and click open because we already downloaded it, and you're going to see something that looks like this. You're going to have all your currency pairs to the left. You're going to have the prices to the right. But what you want to do, if you want to add a pair, let me go ahead and just delete all this just so you guys can see how we add pairs. So you're going to go ahead and delete all that, and then I'm going to go ahead and click the plus sign at the top right, and then you're going to want to go to Forex. And then as you scroll down, you're going to want to go to Euro JPY. Okay, on Euro JPY, we can then click on it. I'm going to show you guys the chart just to show you guys why we mark up our trades and don't look at the chart on MetaTrader, because it's just not efficient enough. TradingView is extremely efficient, so this is why we use it on TradingView. But if I want to trade this account, I'm going to go ahead and click this plus button up here to the top right, and then go down to Euro JPY. So all I did was click the Euro JPY up here. You click that and then you find it. So once you're here, you're going to see market execution. Market execution is pretty much, you want to get into this market right now. If I'm looking at my pip calculator, it's telling me that I have to throw a 0.214 lot. So here I'm going to put 0.21. So I'll look to buy this market right now. So now we just took a buy position, and as you guys can see, we're currently in the trade right now. So that's how you guys use MetaTrader and what you need to know in order to execute a position. So we're going to move on to the next section now. So now let's say I wanted to take a buy position right now like we're currently in, and I want to have a 15 pip stop loss. So the 15 pip stop loss would be somewhere around right over here. So as you guys can see, it is a 15 pip stop loss, and we are going to go for a 25 pip target. So if I do want to take a position here, I'm going to want to go ahead and put a stop loss or a take profit. So if I want to do that, I'm just going to hold down and put modify here, and then I'm going to put stop loss. As you guys can see, all I did was just click stop loss, and if you notice, our stop loss is sitting down over here. If our stop loss is sitting down over here, I'm going to read the numbers that are here to the right in order to set my stop loss at the correct position. So here it says my stop loss is at 171.374, 171.374, and then for my take profit, I'm going to go ahead and read the numbers here to the right and set my take profit as well at 171.772. And then once I'm done with that, I'm going to go ahead here and click modify. So now I have my stop loss and take profit set. As you guys can see, stop loss is set right over here, and then my entry is set here, and my take profit is set up there. So you have everything you need to know in order to either get out of your position without looking at this application, or you can go ahead, if you want to close the position, all you want to do is just hold it and then click close, so you can go ahead and close manually. All you have to do is click this right over here. So I'm just going to leave that trade open. But that's how you guys use MetaTrader 4, how to set your stop loss, how to set your take profit, how to execute positions, how to look at the chart, how to add your symbols. Everything you guys need to know about MetaTrader 4 and the application is only used to execute positions. That is the only reason why we're ever going to use MetaTrader. The rest is done on TradingView. So in this position, if I hit a 30 pip take profit, I'm actually going to make, for that $20 risk, we are going to make $40, which it took took me about 4 hours of work in order to make that money. So I'd much rather make it in the Forex market from my phone and from my beautiful office. So instead of making $40 working 4 hours, you can make $40 in about a couple minutes in this market. So instead of going to that job that you absolutely hate, instead of clocking into that prison of a lifestyle, you guys can come and trade the Forex market. So I pretty much broke every single little thing down that you guys need to know in order to trade these markets profitably, and how it's possible for you guys to do it as well. So now if you guys feel like you learned something new and you guys got a bunch of value from this video, just do me one simple favor and just leave a like down below. And of course, if you guys have any questions, make sure you guys comment your questions as well. So now your only job is just to create a plan. You want to know how you're going to trade the markets, which is pretty much what I showed you, using those zones, when you're going to trade the market, what session you're going to trade the market, what you're going to trade the market, which is your Euro JPY currency pair, and where you're going to trade the market, which I like to trade strictly in my office because that is when I'm fully focused on the markets. You also want to set yourself some rules, which I'll show you guys my trading rules so that you guys can kind of go based off of it, and I'll kind of break it down here for you guys as fast as I can. So this is how my trading rules look. So the first rule is going to be follow your rules. So that's the number one thing that you guys should be reading before you execute a position. And then you're going to want to only take 1 to 2 trades per day, and I'm going to go ahead and add something in here. You're only going to want to risk 1 to 2% per trade as well. The third rule for me would be find support and resistance on the 1 hour and 4 hour time frame. And then the fourth rule will be wait for break and close above or below on the 15-minute or the 30-minute time frame, and then take entry once wick is broken. Wait for confluences to add up as they always do, 4 to 5 confluences. Lose 2 trades or lose focus, just get off of the markets. No impulse entries, no stupid gambler entries, which is no confluences. Be patient, you'd rather be a little bit late than early. Be smart and win trades. Stop thinking about the money. The money will follow if you focus on your trading plan and you focus on taking the best possible setups that you can take. 13th is focus on your trade. Okay, that is the only thing that you guys need to know when it comes to the markets. And as you guys can see, we are currently up about $20 just from taking that position. It was a very nice position as well. So if you guys do want to learn how to make money in the markets, just apply to my mentorship down below and we'll go ahead and get you right. I appreciate you guys, and I appreciate all the love you guys show me. If you guys gain some knowledge, make sure you guys leave a like. If you guys have any questions, leave a comment down below. But this is your journey to becoming profitable and getting out of that prison and finding your freedom through trading.